Well, Feroze Azeez is Deputy CEO at Anand Wealth. He joins me now. Really good to see you, Feroze. Let's first of all talk about the IPO scene right now. Finally, Pine Labs has done it. It's coming to market. And it wouldn't be drawn all year in questions by journalists about when this was going to happen, how this was going to happen, what it was going to look like. But finally, we have some information. So just give us your review on what you think so far.
I think, yes, this IPO has been awaited. One is, I think the IPO market is reasonably vibrant. So I personally think that the set of investors who invest in the IPO and subsequently the volumes which we see after listing in an IPO, almost the kind of free float which is infused in the market gets traded on the first day in most IPOs. So point I'm trying to make is an IPO has two stages of life. One is the collection from the primary market. And once the primary market is shot and then the listing happens, IPOs in India, if you see the volumes in the first 4 or 5 days, you would see at least 3 times turnover of the large portion of free float which is provided to the market. So I think one is all the companies, how they do in the first stage of the first 1-2 weeks is one part of the story. The second part of the story, most IPOs which hold up their IPO prices, and there are some technical resistances in the IPO. One, if one could spot after listing an IPO, is easier to spot, point one. Point two, if they don't fall 5-7% lower than the IPO price, then the kind of stage which is set for further progress is significant. So one, of course, Pine Labs has been awaited for long periods of time. Second, I see the life of a company after getting listed and after the whole shareholder turmoil is done and dusted, and what kind of base formation, what kind of shareholder ownership comes, and which kind of ownership is there from the FII and DII side, which gets published on Bloomberg, is what we see to see what has a long-term future rather than a short-term trading opportunity.
So, Feroze, of the big IPOs that we've seen in the last couple of months, which are the ones that you have been particularly interested in, just in terms of what that trajectory was like, given the initial offering and then the pricing within those first few days, and then what happened after that? I mean, Tata Capital was a big one, right?
Yes, Tata Capital was a big one. I'm not qualified to comment on stocks, but I can definitely give you a little theme of how an unlisted stock. Tata Capital was a very different, unique kind of a IPO. Why? Because in the unlisted space, you would see Tata Capital quoting at prices almost 3 times actually the IPO price, where Tata Capital went into the market. So what happened was it was a very popular unlisted share for the last few years, and a lot of people who had bought that share in the unlisted space lost money. Anybody who owns a share before it gets listed is locked in for almost 6 months to a year. So Tata Capital was a very large disappointment, at least for the unlisted investor, and that had become a deemed public company. So that's point 2. Point 3, I think, which are the other IPOs which are interesting? Of course, there are some IPOs which were loss-making companies or technology companies which made a lot of news in the marketplace. But what is very interesting to see in the IPO market from a retail investors or an individual investor's perspective is most individuals and retail participants are following the anchor book. If it's very well subscribed on the anchor side, the retail subscription is near certainty. And what is happening is the anchor book is getting oversubscribed significantly because of the kind of cash the domestic institution is sitting on. So anchor book resulting in retail money going into domestic institutions, resulting in anchor book. That's the kind of vicious cycle which is promoting the kind of subscriptions which we are seeing in the IPO market. And I would say it's on the little overheated side.
Oh, that's interesting. So would you say that is one of the ways in which 2024 has been different to 2025?
Yes, it has been different. And I think that's the need of the hour. If you look at the Indian capital markets, we have 140 billion people, or 1.4 billion people. And the kind of free float which is there in the market NSE 500, the 500 stock has a free float of not even $500 million. The total free float of all the 524 stocks in the MSCI small cap index is 34 trillion rupees. And domestic institutions are expected to infuse almost 50 trillion rupees over the next 7 years. So there is little free float. So I would say what is happening today is one of the best things which could happen to avoid a bubble or a valuation exaggeration. Because if there's no good paper in the market, how will it absorb the entire financialization? India has only 6.7% of the household savings in equity. Most of the other countries have 20-25%. So India has a long way to go. That kind of influx from debt to equity will result in pockets of overvaluation. If that has to be avoided, good paper needs to come into the market well in time so that our indices have enough free float to absorb the kind of financialization India has to do over the next 10 years.
Yeah, absolutely. I mean, you're talking about over the next 10 years. There's a lot of evolution yet to go through, and you've got to get to that stage where it becomes this sophisticated market. India's market regulator is going to consult stakeholders to review IPOs of small firms. What are your reflections about that?
Yes, I think the small firms, the fact that the IPO law rules have changed, the amount of free float needed to go IPO has come down. Significant, the dilution, requirement for dilution has come down, one. Second, I think India has a very sweet spot. I would say any company which is almost $250 million should look at an IPO, and that's what Indian promoters are doing. I was in an event where there were almost 200 top private families who run businesses who are looking at listing or private equity, and most people are gravitating towards the public life of listing rather than private equity. That was a huge shift I saw over the last 5-7 years in the Indian promoter mindset, which are either our clients or Indian families who own businesses who need to dilute. So I personally think SEBI promoting smaller businesses to get listed will create a larger tail of good businesses which are low. In India, India has the largest number of listed stocks in the world. But the unfortunate part is there are two sides to the story. There's one side of businesses which are absorbing a large amount of capital. There are other businesses which are grappling for it. I think this whole two ends will meet somewhere in the next 4 years.
Okay, we're going to switch gears now. Let's talk earnings. What do you think have been the highlights and the lowlights of the earnings season so far?
See, I personally think when it comes to earnings, India's second quarter earnings, if you look at 28, 29 Nifty companies which have finished their earnings, have grew just about 4% year on year, same quarter, point one. Point two, how we look at each quarter is what is the odds that the year target will be met. Our year target for Nifty growth is 11% earnings growth. I think that seems to be getting more solidified than weakened. So I would say the 11% growth on a base of 1,176 rupees, which is what was the earnings for Nifty last year, seems to be a very high probability. Point one. Point two, what is interesting is going to be to see what's the small cap earnings, NSE small cap 250, which is the index which all domestic institutions are mandated to track, has 250 stocks. 93 stocks have finished their earnings, and the earnings growth pleasantly has come to 17% for these 93 stocks. Last year, the earnings growth for these 250 stocks was 18%. If you don't assume a change of 63 stocks every year, these stocks change. If I keep a constant constituent model to evaluate the last year earnings, it was 17%. I think on the back of last year's 16-17%, another 16-17% will be a good thing to solidify the market and not create any underperformance of the broader market to Nifty.
Okay, but you know, it's really interesting. The last month or so, the Nifty was trying to push and find support above 26,000 and not actually getting there. So it's going to be interesting to see where the market opens this session, especially since we have such downward pressure coming in terms of the messaging from the United States. Let's get into the macro picture. What are some of the external influences? GST, let's just cover that for a second. And from a macro standpoint on the overall economy, talks around tariffs, for example, how is all of this playing into sentiment?
Yes, so to break this down, if you look at GST, if I take GST first, GST growth for the first 6 months is about 9%. That's a good growth. Now comes the GST cuts, which will show up in the next 2, 3, 4 months, both in the terms of the domestic demand going up and the GST collections falling marginally over the short term. If you look at the direct tax collection, the July numbers have had some dip. There was an extension in terms of the due dates to file people's returns. I would attribute that dip completely to this delay or the extension of the due dates. Point two. Point three, I think we've penetrated 36% into our fiscal deficit target for the year, which I think is in line. So we're going to be fiscally prudent. If you look at the kind of non-tax collection, which the government had budgeted, we are almost 90% thanks to the dividend from RBI. So I personally think the macro, especially on the inflation side, has also been very positive. That implies that there's further significant headroom for an Indian central bank vis-a-vis the Fed to reduce interest rates. And already, if you see that the short end of the yield curve has come down, there was a flattish yield curve for the last 3 years, which India was not used to. That was putting immense pressure on the deposits of the banking system. Once the yield curve again gets upward sloping, you will see the banking system not grappling for deposits, because Indian investor, especially the depositor, is very used to a higher interest rate motivation for a longer period deposit. So I think so the whole yield curve bit, the inflation bit, GST, the tax collection, non-tax revenues, the fiscal prudence, all this put together creates a good domestic macro environment. But the global macro environment has been bad. In that environment, if India has been able to sustain 3-4% lower than its historical levels of last year in September, I think it's commendable. And if there's some good news on the global side, you will see all kind of short covering, especially in index futures, which FIIs are almost 84% short in index futures. They're short practically in the cash market. They've been selling. Domestic institutions are sitting on cash. So any kind of good news could infuse some degree of short covering. The fact that we are at 25,500, given the kind of global environment and the kind of tariff threats which India has been sidelined, and our competitors in the global market, Bangladesh, Vietnam, are enjoying a 15-18% tariff, and we are 25 plus 25. That's a scary thing. In spite of that, sticking at 25,500 is more optimistic than pessimistic, I would say.
Feroze, just finally, thank you for covering all of that. It was a multi-layered question. My last question is really around, why would investors be looking at emerging markets right now? Why would they be looking at Indian equities right now when yields are actually looking better elsewhere? If you look at bonds, if you look at gold, if you look at, treasuries, for example.
See, I think I personally think it's all about the time frames. If somebody is looking at something as short term as 6 months to a year, definitely there's no case for emerging markets. There's enough opportunity globally, or in the commodity space or the precious metal space, as you lightly alluded to. But if you're looking at 3, 4, 5 years, you have to chase growth as an investor. And where is growth? Growth is clearly in the economy side in India, right? A large economy like India growing at that pace and promising to grow for the next 5 years on the nominal side more than 10% is a very good raw material for one to create a portfolio to beat 15-17% even dollar return. So I personally think if growth is there, if an investor is a 5-year investor, there's no other choice he has but to chase growth. And growth is highest probability in India, in the large economies, in the last 6-7 economies. Growth is there. That gives you a great raw material for a good bottom-up stock picker to get to 15-17% dollar return in emerging markets, or especially India. I think that's a reasonable case to be attracted.
All right, Feroze, thank you so much for that. Feroze Azeez from Anand Rathi Wealth, thank you for handling all of those different angles for us.